Wait, what if your school's biggest trusted bank vanished completely overnight forever? Imagine putting your birthday money somewhere safe and it just vanished completely one day. This is not a movie. It actually happened to one of the world's oldest banks ever. Credit Suisse, a 167-year-old bank, collapsed in 2023, shocking the entire financial world. Stay here because we reveal exactly how trust destroyed a banking giant. Let's go. Credit Suisse was not just any bank, it was Switzerland's most powerful financial institution ever. Switzerland is famous for chocolate, watches, and the world's most trusted banks, seriously famous. Credit Suisse had offices in 50 countries and managed trillions of dollars for wealthy clients. For over 167 years, governments, businesses, and rich families trusted Credit Suisse with their money completely. But behind the shiny doors, some very dangerous decisions were being made secretly inside. Let's go back to 1856. Credit Suisse was born to help build Switzerland's railway system. It grew bigger every decade, helping businesses and countries manage enormous amounts of financial activity. By the 2000s, Credit Suisse was one of the top 10 banks on the entire planet. They managed over $1 trillion, that is $1,000 billion for their clients. Sounds amazing, right? But behind the shiny doors, dangerous decisions were being made very secretly. The bank started making very risky bets, like gambling with other people's savings and investments. Imagine your friend bets your lunch money on a game they are really not good at. That is basically what Credit Suisse was doing, risking clients' money on dangerous, unpredictable investments. In 2021, a company called Archegos Capital lost billions in 1 week. Credit Suisse was hurt. Credit Suisse lost over $5 billion from the Archegos disaster in just a few days. Also in 2021, a supply chain firm called Greensill Capital collapsed. Credit Suisse lost more billions. Two massive financial disasters in 1 year, like failing two really important tests back to back. The bank's managers didn't have proper safety rules to stop risky bets from getting too big. When you play without rules, you eventually lose everything, and that is exactly what started happening. Scandals kept piling up, shady dealings, helping hide money, and terrible investment decisions repeatedly. Now here's the really important part. People started losing their trust in Credit Suisse completely. Trust is like glue. It holds everything in banking together, and without it, everything falls apart. When clients heard about the scandals, they started pulling their money out of the bank fast. In just 3 months of 2022, clients withdrew over $100 billion, a truly unbelievable amount. Imagine a swimming pool. Now imagine everyone jumping out at the exact same moment simultaneously. When too many people withdraw money at once, a bank runs out of cash to give everyone. This is called a bank run, and it is one of the most dangerous things in finance. Credit Suisse tried to fix things. They brought in new managers and promised big changes ahead. But every time they made a promise, another scandal popped up and destroyed the new trust again. By early 2023, the bank's stock price had fallen over 80%. Investors had almost completely given up. Then in March 2023, American bank Silicon Valley Bank also collapsed suddenly, scaring everyone globally. This scared everyone more. People thought if that bank fell, Credit Suisse might fall next. In just 1 day, Credit Suisse lost 25% of its stock value. Panic was spreading everywhere fast. The Swiss government had to act immediately. They couldn't let such a massive bank simply disappear. Here comes UBS, another giant Swiss bank, which was basically Credit Suisse's biggest rival for decades. The Swiss government forced UBS to buy Credit Suisse for just $3 billion, a fire sale. Before the collapse, Credit Suisse was worth over $8 billion, so this was a massive loss. UBS agreed to take over, but demanded the Swiss government cover potential losses, and they agreed. On March 19, 2023, the deal was signed, one of the biggest banking takeovers in modern history. 167 years of banking history ended in 1 weekend, faster than anyone could have ever imagined. So what is the big lesson here? Let's break it down in a way anyone can understand. Lesson 1. Banks don't fail slowly. They fall fast once people stop trusting them completely. It can take 100 years to build trust, but just 100 days to lose it all completely. Lesson 2. Liquidity matters more than profits. Having enough cash available is more important always. Liquidity means having real money available right now, not just numbers looking good on paper. Credit Suisse looked profitable on paper, but couldn't actually give clients their money when requested quickly. Imagine having $1 million in a locked safe, but no key. That money is not accessible. Lesson 3. Trust is actually a financial asset. It has real value, just like gold or money. When Credit Suisse lost trust, it lost real money. Billions disappeared because of lost confidence entirely. Reputation is not just about feeling good. It directly affects how much your business is actually worth. Lesson 4. Having proper risk controls matters. You need safety rules before things go dangerously wrong. Risk control is like wearing a helmet before riding a bike, not after you have already fallen. Credit Suisse had warning signs for years, but ignored them, and eventually paid an enormous price. Lesson 5. Scandals have a cumulative effect. Each small problem makes the next problem much worse. One bad grade doesn't end your school year, but 10 bad grades in a row definitely will. Now let's talk about what changed in banking after this massive collapse happened back in 2023. In 2026, banking regulations around the world are much stricter than they were just 3 years ago. Regulators now require banks to hold more emergency cash reserves so they can survive sudden withdrawals. Think of it like a fire extinguisher. Banks must now always have one ready just in case. Banks must now report risky investments to regulators every single week instead of just every 3 months. Switzerland completely changed its banking laws after 2023, adding new rules to prevent another collapse situation. The Swiss government learned that being too lenient with big banks created dangerous risks for everyone. Now there are stress tests, fake financial emergencies, that banks must pass every single year. A stress test asks, if 40% of clients withdrew money tomorrow, could this bank survive safely? Credit Suisse would have failed these tests years earlier, which might have prevented the collapse completely. International banking groups like the Basel Committee made new rules requiring stronger financial cushions for banks. These rules mean banks must save more money during good times to prepare for bad times ahead. It is like saving extra food before a storm. Smart banks prepare well before disaster arrives. New whistleblower protections were added, so bank employees can report problems without getting into trouble. In 2026, banking is safer because of Credit Suisse's failure. Sometimes disasters teach the best lessons. But here is something that still hasn't changed. The concept of too big to fail still exists. Too big to fail means some banks are so huge that letting them collapse would hurt everyone globally. When a giant bank fails, millions of people lose savings, businesses can't borrow, and economies collapse. Imagine if your whole school lunch program shut down suddenly. Everyone would suffer, not just one student. UBS, after buying Credit Suisse, became even bigger, now controlling over $5 trillion in assets. That is bigger than the entire economy of Japan, the world's third largest economy combined together. Some experts worry that UBS is now too big to fail, creating a new version of the same problem. Regulators are watching UBS very carefully now, making sure it doesn't repeat Credit Suisse's same mistakes. The irony is that fixing one giant bank problem created an even bigger bank problem to worry about. This is why governments around the world are still debating what to do about these banking giants. So what can you learn from Credit Suisse's story, even as a young person growing up today? First, always ask questions before trusting anyone with your money, even if they seem very trustworthy. Second, having savings available right now is always better than investments you cannot access when needed. Third, when something looks too good to be true in finance, it usually is. Always be careful. Fourth, trust takes years to build and seconds to destroy. Protect your reputation in everything. Credit Suisse's story is really about human decisions, greed, shortcuts, and ignoring warning signs repeatedly. The people who ran this bank were not evil, they just made bad choices and ignored the risks. In banking and in life, small problems ignored become big disasters. Always address issues early honestly. The 2023 banking crisis reminded the world that no institution is too old or too powerful to fail. Even a 167-year-old bank with trillions of dollars can disappear in just one single weekend completely. But from every great failure comes great learning. Banking today is smarter because of this story. New regulations, better transparency, and stronger trust practices are all results of Credit Suisse's painful collapse. Remember, whether you are a bank or a student, reputation and trustworthiness are your most valuable assets. Credit Suisse fell not because of a recession, but because the world simply stopped believing in them. And that is the most powerful financial lesson of all. Trust is the true foundation of finance.